Welcome to TradeTheMGuy.com. This is John. This report is for the 23rd. Well, we got a little bit more of that soft downdraft as the shakeout had rolled over here right as we get to zero, which is always a critical point from a daily standpoint. We get right there at negative 0.93, almost just one under, and then we started to see the soft decay. And we can see that here it was starting to accelerate with the steel crossing below cyan. We'd already had the green below red, and that took place a couple days earlier. Right about here at the peak, followed through the next day, and then we saw a little bit more continuation with it. Not too surprising. Same thing with NASDAQ. I mean, it was clean from right there. We've talked about this before when we reached the peak of it, which was really right about here, the bounce up, and then it kind of rolls over. That's what I was talking about. Pretty consistent with that thinking. Going back to the bottom side in the euro range, and that's all it is just a range. We've been bouncing back and forth. It's probably the most negative we've seen from a shakeout in quite a while since the dip right back over here. The fact that we're at a much higher level indicates that we're probably going to hold down at this level, but it'd be interesting to see if it does make the full dip to the 21 range. You can see here the massive, massive is relative. We're still inside the same range with the Treasury setup, but we still had that target of 113. It hasn't changed. We've been way outside of it for quite some time, and we're finally seeing this ebb of the gold here on the shakeout indicator, suggesting that big long trend may finally be coming to an end as inflation and those kinds of things are starting to indicate that we're going to come to the tail end of low rates, which will make it much more complicated for the market because it's going to draw money elsewhere. And I know you hear a lot about that 3% yield situation, and that's going to be attractive to a lot of people from a security standpoint as opposed to being in a what a lot of people view as an elevated market, which I don't necessarily think is accurate, but that's okay. That's the whole point of the market, to debate that issue. And from an oil standpoint, still at the higher range there, and gold a little bit of a retrace, and a strong DOC spread from the gold right in the middle of what was a fairly decent move. Of course, you had your little death cross right there, came down and fought back. We're still within a healthy range. All we did was come back to the ABM green at this particular point, but it still looks to express a bit more weakness coming into this setup, sort of breaking out into a little bit more of an extreme on it. This is always a good one. Bitcoin, okay, it wasn't long after the announcement that George Soros and them were getting big and the Rothschilds into crypto Bitcoin. We started to see it. Actually, we can look at it from the daily standpoint because it showed right here. We had our dip below the orange here, and we had the breakout move above plus 13.5, and that was right about 666.5. 6 over 5. I love that one. That's a great one. Macro over micro. Anyway, then we've seen a nice, strong press of both long-term, mid-term buyers, even in the middle of a short-term buyer fade. But you had strong GAM, and you can see that it's turn the corner from there, and even from here, we had a little bit of weakness in the shakeout from that giant pump up, and then it's been solid shakeout from there, which means buyers have just been floating into it. We got a lot of positive extremes though, which means some of this is just algo activity that's pushed things a little bit. Obviously, someone wants to make a little on their investment from there, so why not pump it? Good 30% to 50%. Always fun. We could shrink down Friday's action from a daily. It was a pretty clean day for all intents and purposes. Kind of small. You'll notice the range from these little white lines to white lines. But we ended up with pretty strong short. All the way up here at the 76, started to break below it. I took advantage of that one, and then it was pretty much just riding that down. We ended up with a nice little buy signal on the little conversion setup, and this again is related to the steel above 13.5. And it was interesting because it gave the buy, retested the low, and then popped back up before flipping to the gold, which was in negative shakeout, which suggested it was going to go lower, and it did. And then as soon as that turned around, you ended up with a nice little buy setup that came in right there, dipped a little bit, and then repeated with the DOC spread, which took place right about here. Beautiful with the cyan over steel, green below red, and red under zero. There's always an interesting one too, because whenever you see that red pivoting right around zero, it's usually rather bearish. And I always look not just for lows, but new lows to be made. And that's exactly what happened. And as those new lows came, we ended up creating what you would call a double. No, it's interesting. It's a double bottom from an indicator standpoint, but not from a price standpoint. So the first bottom in the red DOC was right here. Oftentimes what you'll see is like back over here where you have the deep dip and then you get a higher one and you form the little trend line. So in this case it made a little bit lower low on much higher DOC reading, and boom, shot up all the way to 50% in this case. Well, here you had the low that was taking place right about here. It breaks to a new low on roughly equal DOC reading and starts its turnaround, and then it just took off all the way to the end. And then a nice little pop up at the open here, fading back just a little bit on the soft shakeout setup. But it's an indication that even if we dip here, we're likely to revisit those highs during the day of trading. Let me just expand that, makes it easier to see. And the nice thing about being able to break the market out with these various segments is even within this, I can separate, and I'll have the code. This will eventually turn red, and then you'll just see green with this, and the red will start a little bit earlier. So you won't necessarily be notified of these various, segments, but just depicting it here, it lets you see that even within what we would consider the same readings, because a lot of people want to look at DOC or whatever and think of it as a constant, and it's not. You're really looking at very particular market areas, and even becomes relevant when it comes to the fib level setup here, because the behavior of the market below 23% is different than the market between 0 and 50, and it's also dramatically different than the market above 50, and they have very different implications. And so it's important that the depiction of those setups is identified first. That way, whenever the specific readings come, they're more cogent to specifically where the market is in relation in somewhat to price, but more importantly, how the algos react within these various zones, because this would not be considered an accurate Fibonacci, but it's often how their algorithms utilize the depiction of value or fair price, if you want to call it that. Either is fine to say, it's all relative, because they're really not looking for price discovery as much as attacking a weaker setup versus a stronger setup. And then, of course, general price discovery is acquired over the broader perspective of bigger time and daily effect. But this makes for intraday opportunities to seize against, just softness or strength in a market, and takes advantage accordingly. So that's the long and the short of it for now. Looks like we're going to have continued weakness overall, but it doesn't look to be anything dramatic at this stage. We're just in a normal little market gyration. That's the easiest way to call it at this particular point. As always, though, I will put up charts and make any of the adjustments to the programs, because we've got several other functions that I've completed that we'll have for the end of the month, which will include the MBI GAMs, and probably include the finished portions of this paint bar that will be similar to a conversion of just the DoCon paint, which is traditionally what this is coming off of anyway. As always, though, trade well, and we will talk again later.